Hello there, I'm real estate economist Matthew Gardner, and welcome to this month's episode of Mind the Housing Market. Last week I got a note from one of my followers, and they wanted my opinion on an interview that had just been published in Newsweek. The person being interviewed was a housing analyst who, I have to say, I haven't heard of, but once I read the headline, well, I knew it was something that I had to talk about. So let's get straight to it. As you can see, quite an eye-catching headline. Now, this analyst's position is that we're set to see a housing crash that won't just be as bad as 2008, but one that's going to be considerably worse. And these are some of the reasons that she believes this is going to happen. Inventory is up and sales, or demand, is down. Price growth has stalled, but prices haven't. She cites a recent Zillow report stating that more than half of all US homes have already seen prices fall. Buyers are sidelined due to the overall cost of ownership, and high-end sales, which she believes are propping up overall values, will be overtaken by sales of cheaper homes. And it's the incremental growth at lower price points, well, that's going to bring down the national sale price very significantly. Given all these factors, she expects a massive number of investors to withdraw from the market, and that will lead to a flood of new supply and, as you all know, the only way to experience a systemic decline in home values is when supply far exceeds demand. And ultimately, home values are going to plummet. All right, let's go through some of the numbers that she's using. Now, I can't dispute that inventory levels are up. But remember, we have been recovering from a period where there was literally hardly anything out there to buy. Yes, listings are higher, but versus the last pre-COVID October, listings are off 14%, and they are still lower than any pre-2020 October on record. Yes, sales have slowed, but again, off the all-time lows. And not only is the annualized pace of sales higher, but the 358,000 monthly sales that we saw in October up 2.9% from a year ago. Prices, which, by the way, a lot of analysts had forecasted would have already fallen off a cliff because of the period where we saw mortgage rates doubling, well, they haven't. In fact, sale prices are actually modestly higher. I mean, the data doesn't show the supposed jump in lower price point sales either. In fact, the share of total sales that were between $100,000 and $250,000 been holding around 18% for pretty much all of 2025. And as for institutional investors flooding the market, just 3% of rented homes in the US are owned by institutions. But what if she's referring to all investors, not just the big guys? Okay, well, investors own roughly 20% of all single-family homes, so that's 20% of 86 million, 17 point something million. That's a lot. But tell me this, why would small investors, well, who've done remarkably well with their rental properties, why would they decide to walk away? Sure, because they've done so well, if prices were to drop by 50%, I can absolutely see them trying to offload it. But wouldn't that mean that investors were already panic selling and flooding the market with inventory? As I see it, it's really a kind of chicken and egg argument. Which comes first? You can't see prices collapse without a surge in listings. And you won't get a surge in listings without prices collapsing. Is there stress in the market today? Of course there is. But outside of the stress being felt by first-time buyers, I cannot see anything significant enough to cause the sort of apocalyptic collapse that she is forecasting. And for those who think that this is 2008 all over again, well, let me share a few more numbers with you. Borrowers' credit quality, significantly better than it was. The share of mortgages given to people with poor credit, low. The share of buyers using ARMs, yes, it's risen, but again, very low relative to the pre-bubble era. The number of homes with new foreclosure actions, yes, it's risen, but remains well below historic averages. The ratio of mortgage debt to home values still declining, and that's a good thing because it's led to this. The share of owners with more than 50% equity is off its high, but it's still closer to 50% than to 40%. Miss Wright's thesis is that home prices are going to not just fall back to historic norms. You see, if that was the case, and let's say the normal ratio of income to home price was 3-to-1, well, that means a median price for a home in the United States would be around $250,000 and not be more than $400,000 that we're seeing today. But no, that's not a big enough statement to make. Now, I actually had to read what she said several times just to make sure that I didn't miss anything. And I quote, Wright then said that next year home prices might correct to a point where they actually match median incomes. So what she's saying is that home price is going to drop down to a little more than $80,000. I'm sorry, Miss Wright, but I'm not buying it. But I would be a big buyer of lots of houses if I could pick them all up for 80 grand. Seriously though, as I've said for years, I believe that housing affordability, that's the biggest issue that we face as a nation. I'm not worried about us folk out there that are homeowners that have done remarkably well. I mean, collectively, we sit on roughly $35 trillion of equity. Good for us. And for those that still have a mortgage, they've likely got a mortgage rate which will never be seen again. No one can deny that home prices are at levels that are preventing a vast number of would-be first-time home buyers from entering the market. And that is what we should be writing more about. Not putting out some sensationalist headlines that, in my opinion, it's well outside the realms of probability. There you have it. I hope you found my thoughts to be of interest. If you did, please subscribe. And if you've got any comments, leave them here. I'd love to hear from you. So I look forward to seeing you all next month, which, by the way, it's time for me to dust off the crystal ball. And I'm going to be giving you my forecasts for the US housing market in 2026. Until then, take care. And I'll talk to you soon. Bye now.